Okay, hello everyone. This is a weekly market update from February 7 to February 14. It's presented by Yi Zhang, Xuejiao Wu, Yizhe Jiang, and Zach McKinney. And first, let's start with some economics news. At first, the United States GDP grows at 2.6% in the last quarters 2017, and then the personal incomes increased 0.3% in January, and the stock market in this week. After dropping more than 3% on Monday and Thursday, the Dow Jones and the S&P 500 entered corrections, a fall of more than 10% from their high 2 weeks ago. And then, in economics conditions, the White House budget proposal projects the economics would grow about 3%. Its strong growth assumptions with relatively low borrowing cost, particularly in the back half of the budget's 10 years forecast, help to show how smaller than the defects as a share of overall economics. And then the United States government bonds strengthened on Friday as selling pauses. And the President Donald Trump signs a 2-year budget deal on Friday morning. It crushes some fears of a prolonged government shutdown.
Okay, let's move to recent stock equity. The global stock markets are struck again by the sell-off in the U.S. markets. In the week gone by, the U.S. stock markets continue to slide on growing uncertainty. The U.S. Federal Reserve will rise interest rate faster than expected. Jones declined by 1,155 points on Monday, was deepest in the percentage term since August 2011. When markets dropped in the afternoon of Black Monday, the day Standard & Poor's downgraded its credit rating of the U.S. Yet again on Tuesday, the Dow stopped by over 1,000 points, striking a sharp pullback on stocks across the world markets. Apart from the U.S. Federal Reserve, even the Bank of England has headed towards an uptrend in interest rates. The next is convertible and debt financings. We found by High-Tech Global Inc., a technology and service company that provides cost-effective and sustainable waste management solution, announced the completion of $5 million non-convertible senior secured debt financing with Michelle's Capital Special Finance Fund second this week. The debt financing carries a 5-year maturity and bears an interest rate of over 10% a year. As part of debt financing, the company issued 320,000 shares of restricted by High-Tech common stock to MCSFF. Simultaneously with the closing of the debt financing, the company's CEO, Frank, exchanged $5 billion in debt and advanced for $4 million in a newly issued preferred stock convertible into the company's common stock at 4.5 per share and $1 million in a muted junior note. And let's move to markets. We found 2 examples. The first is CMC Energy Service acquires Clean Markets. Mainly a leader in the energy conversion industry and a certified women's business enterprise, announced the acquisition of Philadelphia-based Clean Markets on February 5th this year. Its merger creates one of the largest women-owned energy efficiency and clean energy program management firms in the U.S. The deal is anticipated to close in mid this year. And the second is International Soccer Investment Group, Advantage Sports Union, acquired significant interest in Phoenix Racing Facility on February 10th this year.
Okay, let's move next part. So the news title is William Blair expands healthcare investment banking team. So William Blair announced Carrie Robinson has joined the firm's healthcare investment banking team as a managing director. William Blair is a global star in banking, management, and personal wealth management of investment. They provide financial services, strategies, and solutions to meet our customers' evolving needs. And this group enables corporations, financial sponsors, and owners around the world to achieve financing objectives. Drawing on the intelligence and sector of a global team that reaches across more than 15 cities, the group brings an innovative approach to corporate boards, financial projects, and mergers. And over the past 15 years, Mr. Robinson has advised on industry-shaping transactions involving private and traded companies in the health sector, including a $2.8 billion merger. He completed more than 150 transactions and more than $100 billion in value across services and healthcare. And the next part is storm fronting and the rise of window shopping in investment banking. So the investment banking landscape has always been markedly different. People's interactions undergone a different transformation. Technology changed the age-old relationship. Compared to typical high-street interactions, the investment banking landscape has always been different. Because of that, there has no any pressure on customer for products. And while the main services are around finance, many activities carried out by investment banks such as risk management and product control. Thanks to the automation, the next 10 to 15 years may present a different landscape in which only the highest services are handled by humans. For example, investment banks offer products and a pricing system for the customer. But the last part is the new model will require an organization's technology and the way they price, sell, clear, and maintain products, all the way through from customer experience to design. Investment banks are increasingly in a position where they must adapt themselves, racing to undercut competitors on price. Thank you.
The next important thing to look at is how political events have impacted the market. The largest political event that has taken place in the past week is when Jerome Powell took the oath of office as the new chairman of the Federal Reserve on Monday. With this new uncertainty as a new leader and what his decisions will mean on interest rates, the Dow Jones has had its worst percentage drop since 2011, and it has continued to drop since then. Part of the reason for this is because people are fearing that there's a potentially high inflation that will come in the future, and this will encourage the Fed to increase the interest rates and in order to control inflation. The reason why inflation is expected to increase is because in the past 12 months, the average wage gain of 2.9%, which is the sharpest in the past 8 years, will have an upward push on inflation. In other words, higher wages equals higher inflation, which is a higher incentive for the Fed to raise interest rates. A couple other factors that might incentivize the Fed to increase interest rates is the $1.5 trillion tax cut by President Trump for corporations, the very low unemployment rate that we have right now, and also the economic growth that is expected to be 3% this year. And so as we're looking at these things, it can be seen that the global market has a downward trend all across the board. I have the main indexes from many of the main countries with Japan, China, France, Germany, the UK, and the US. All of the countries, with the exception of the US, have a downward trend line. The US has recovered a little bit within the week and is the only one that has had recent positive gains. In regards to the commodities market, there is also a downward trend. Gold and oil are steeply declining. In the FX market, the dollar has rose the highest that it's been within the last 15 months. It's a 15-month high. Then in contrast to that, the euro heads towards its weakest position since November of 2006. Then there's many other currencies that are in different places, one of which is the yen, which is actually at a 4-month high. How all this is affecting different markets can be looked at by looking at the hedge fund market. And the volatility is actually going to help the hedge fund market. It'll help them be able to take advantage of those ups and downs so that they can get greater returns. With that being said, different states are taking different positions on the hedge funds. Like the state of Illinois is reallocating their money away from hedge funds. They used to have money in 81 hedge funds, and now they have reduced it to just 5 because they feel like the hedge funds haven't hit the benchmarks that the rest of the market is providing. With that being said, this is our analysis of the past week, and we are grateful for your time and listening to this overview. Thank you.